All right, guys, let's go over this Robinhood portfolio. Right now, it's really raining outside. It's heavy rain right now, and I'm going to go over the portfolio since I have nothing to do at the moment. Right now, the portfolio is down $31.40. Actually, today is Saturday, so the markets are closed today, and in the after hours, I am down $9.25. So we're going to quickly talk about what I've been doing with the portfolio. As you can see on the bottom, funds were available. I put $20 into the portfolio. I'm always sort of just putting money into the portfolio. You know, $20 here, maybe like $100 here, maybe like $500 there. But for the week, we're going to take a look at my stats. Still up 1%. $372 gain, and for the past month I am down 1%, and for the past 3 months I am up 2%, $449. So I'm gonna quickly talk about portfolio. I think in the last video I mentioned tariffs was a big deal. The markets were very volatile, and a lot of people were selling off their shares. I'm gonna quickly talk about what I've been doing, and I've sort of just rebalancing the portfolio just a little bit, making small tweaks here and there. But I have made some sacrifices because of my changes, and we're gonna quickly just go over what changes was made in the portfolio. So we can take a look at Apple right now, 189. Apple did not have a good day Friday, but as you guys can see, my average cost went up. So I think I was around 172 last time, and now it's at 179. So I added 2 shares of Apple, and I definitely want to buy some more Apple here. Portfolio diversity is just around 4% or 4% or so. I'm looking to get that up to around 10%, guys. So I'm definitely going to start buying some more Apple here. But if it can fall back down to that $170 mark, I think that'll be pretty good. And I believe Apple actually paid a dividend. Let me just check right quick. And it did pay a dividend of $2.31, I want to say. It's not pulling up here, but $2.31 was paid out. And yeah, I'm definitely looking forward to buying more Apple. Unfortunately, in order to put some more money into the portfolio and sort of just moving the money around, I did have to sacrifice Costco a little bit. And the money that I sold off from Costco, I think it got up to like $248 or something like that. I just threw it in Apple because right now I was comparing valuations between Apple and Costco, and Apple went down a lot, guys. This thing, it went down $10 for 5%. It dropped 5%. So. But the past 3 months, I'm still up 11%, so that's still pretty good. But I definitely want to start buying some of these dips here. And I moved the money out of Costco's valuation, and I threw it into Apple because I think they're just at a better buy. Enbridge, 37.53, 30 shares. Oil's been doing really good lately. I bought Enbridge, and because I actually have some of this in my M1 Finance account, and I did say that I wanted to trim down the stocks between my M1 Finance account and Robinhood because I was seeing a lot of similarities. But I put Enbridge back into the portfolio because I can deal with a high dividend paying stock like Enbridge, Altria, and what's the other stock? I think AT&T. Those 3 stocks are actually in my M1 Finance account, but it's in my Roth IRA. But Enbridge is a good company. I like them a lot. They've been going up a lot lately, and they're still at a pretty good valuation. I like their diversification in that Canadian sector. Canadian Energy, this is an energy stock again, guys. Pretty good company that pays a pretty high dividend, a significant dividend for the portfolio, so I can keep generating more compound interest. Johnson & Johnson, 138. Let's take a look at my average cost, 139. So I did buy this a little high. I'm definitely looking forward to adding some more Johnson & Johnson here. So what I did was I didn't do anything with Johnson & Johnson just yet. I'm looking to buy on a dip. Let's take a look at some of these dips right here. So these aren't really significant dips, but here's a big giant gap, especially during that December correction. And this was a good time to buy some shares of Johnson & Johnson. I didn't, but Johnson & Johnson is a good company. They are a dividend king, and they've been paying that dividend for quite a while now. And I think they recently upped their dividend. So they increased the dividend to like 95 cents, which is good to see. But I'm definitely going to add some more Johnson & Johnson and get that portfolio diversity around 10% or so. So just like Apple, I'm definitely moving the money around. I'm looking at good valuations and good buying points that pay significant dividends. I just quickly went over Johnson & Johnson. Let's take a look at Pfizer, 41.38. See, shares 50. Equity $2,000 or so. Average cost 39. I really wanted to buy Pfizer at that $39 buying point, which I thought was a pretty good buying point. Up right now, I'm up $74 on them, and they do pay a pretty fat dividend. I think what I did was I sold SCHD and I moved the money into Pfizer. So I thought that was a pretty good move because they both pay the same. And I want to lock down that healthcare industry because I'm very, very bullish on healthcare. It's something that, humans, people, they will always need healthcare. So I really want to lock that sector down. Total amount, you guys can see my dividends right there, $18. I'm going to get paid June 6, 2019. So, yeah, it's a good stock. I like this stock a lot. And when it dips down a little bit further from $39 until that high 30 mark, I'm definitely going to be buying some more shares of Pfizer. So let's take a look at Altria, 50 shares. I may have had 50 shares in a previous video, but my average cost is $53.53. And, Altria really been stagnant lately, but that's okay. I'm perfectly fine with Altria just not doing anything and me sitting there just collecting dividends from it. A lot of people, I guess, are just waiting around seeing what the FDA is going to do with some of these products. I think vaping's pretty good with the teen market. Cigarette sales have not been very good, but people are trying to live healthier lives. So, but Altria is trying to do all sorts of things, guys. I know for the year they're not looking pretty good, down 5%, but definitely a good buy on a dip here. I think. Getting into the cannabis sector. So I think they put like $1 billion into Cron. So I thought that was a pretty good move just to diversify a little bit. But it's, a lot of people say, it's just cigarette sales. It's not just cigarette sales. They sell the vaping. They're trying to move into the cannabis or, medical marijuana, if you want to look at it that way. But this is a really high portfolio diversity. So I'm not going to be adding any shares to Altria right at this point in time, at this moment, 11%. So I'm really just going to be focusing on Johnson & Johnson and Apple and get that portfolio diversity up to 10% or so. Let's take a look at some more shares right here. AT&T, $31.75. This actually got back down to like $30 or so. And, what I'm trying to do, guys, is I'm trying to sit on cash. So, when the market tanks heavily like it did with those tariffs, I'll be ready to buy. So I've been not trying to add as much money into the portfolio. You guys can see like I'm adding $20 here, $20 there, but in order to move some significant amount of money into a stock like AT&T that pays a pretty good dividend and it's on sale, I had to sacrifice some shares of Disney, I believe, which is sad because I really like Disney. Even at these levels, I know Disney has really spiked up thanks to the streaming services, and they're buying up all the streaming services and the movies. There's still some good movies coming out with Disney, but unfortunately, guys, I needed to move that money into AT&T, and right now the portfolio diversity is around 13%. So, I'm not going to be adding any more shares to AT&T just yet. I want to get the other positions up, like Apple and Johnson & Johnson, get those up to about 10% or so I can lower my portfolio diversity with the other companies and ETFs. So right now 95 shares, so I'm almost to that sweet spot of 100 shares, which would pay $50 for the month that it does pay on. And you guys can see a limit buy here, that's a limit order that's been put into place. Limit price $30.75. So that's right at my average price for quantity of 5 shares. So I love AT&T. I think that they're still giant telecom stock that I really like, and I think they're not going anywhere anytime soon. So, you guys, I kind of trimmed the portfolio back because I wanted 5 sectors to focus on. I wanted to focus on technology, which is Apple. I wanted to focus on energy, which is Enbridge. Healthcare, I really want to lock that sector down, so that's why you guys see Pfizer and Johnson & Johnson there, 2 shares of healthcare. I wanted a good staple stock. For Altria, I have thought about switching out Altria for a little bit more safer, a safer stock, something like Procter and Gamble. But right now, ticker symbol PG is just way too high. I think they're around 107 or so. I'm trying to pull it up here, but it looks like my phone is slow. It's not really loading. Let's try to go out here. Oh, there it is. So let's try to click on Procter. So yeah, 107, 107.45. Procter & Gamble's really just been spiking up. This is not a good time to buy this company, I believe. I just waiting on a dip for them. This was a good dip right here when it was around 2018 or so. This is when I think consumer staples were really doing bad, and this would have been a perfect time to buy Procter & Gamble. We're not going to stop using its products, all the products that they have, the tissue paper, all that stuff. Just a good stock, and it pays a pretty good dividend even at these levels. So. But I'm sticking with Altria here. I'm not going to sell Altria, and the 80 cents dividend, I can't complain about that. So anyway, yeah, I wanted to focus on 5 sectors, and that's why my portfolio is sort of just trimmed down here. Retail, I got out of retail because I needed to put some money into Apple, and I got out of Disney because I needed to put some money into AT&T. But 5 sectors. I think I said shares, but 5. I want to focus on 5 sectors: technology, energy, healthcare, staples, and telecom. So those are 5 sectors that I'm focusing on right now. And then I just kind of round out the portfolio with Vanguard Total Stock Market ETF 146, 50 shares 121. Very, very high portfolio diversity that I'm trimming down. I think this at one point this was almost half of my portfolio, guys. But I've done a good job of just getting that portfolio diversity down to 32% or so. And total return still looks good. It was $1,228. So it's still up 20%, even with all the tariff news and the markets are going down. This is a buy and hold forever ETF. Definitely want to get that portfolio diversity down. That's an eye opener there, 32%. So it's still a good chunk of the portfolio, but I'm working on that, getting that portfolio diversity down. Power Shares S&P 500 high dividend ETF, $42. I may have had, what's it called, ticker symbol VIG in the last video. And the reason why I sold ticker symbol VIG, let me just pull it up here. Just right quick. VIG, let's take a look. So the reason why I sold this ETF was because, well, not only is because of its valuation, but I think I bought this prematurely. Right now, I'm really trying to stay away from industrials, guys, because I just don't see any end of the trading war anytime soon. And SCHD, I think that was a big reason why I sold SCHD, because it's filled with industrials, and VIG is also filled with industrial stocks. So anything that's industrial related is getting hit pretty hard here. We're looking at blue chip companies like 3M. This is a pretty good solid buy for 3M, but I'm gonna reevaluate a 3M once it gets down at a 160 mark. But yeah, this is pretty good buy. It's a significant dip. This thing is down 18%. You're looking at companies like Boeing down from its all-time highs. I think it got as high as $430, and then it trimmed all the way down to like $355 or so. So industrial is getting hit a lot thanks to these tariffs. But I don't know why it's not pulling up here. I'm just going to skip that out. But yeah, Power Shares S&P 500 dividend ETF, good ETF that tracks the S&P 500. It selects the lowest volatility stocks of the S&P 500 that pay the highest dividend. So $341. I'm still up 8% on them, and 100 shares. So I'm still going to be compounding that dividend over and over again. And I'm not going to touch it. So that's it for the portfolio, guys. I know the portfolio's been it's a really short video. It's only 8 stocks, 2 ETFs in the portfolio, but I trimmed the portfolio down so I can focus on just 5 sectors at the moment. 5 sectors that I think are going to do pretty well, and just avoiding the industrials right now because I think the tariffs are not going to be going anywhere anytime soon. So yeah, right now portfolio at $22,834, pretty significant amount, and I'm definitely looking forward to getting the portfolio to $25,000 dollars or so. So I can do some unlimited day trades with $25,000. But that's going to do it for portfolio, guys. Again, I am down for the today is Saturday. I'm down for Friday, but I don't really care. I know I'm going to be doing pretty good with the companies that I have. That's going to do it, and guys, and I'll see you guys next time.